Well, just from on a valuation perspective, it's unloved. Old media is cheap. Prime TV, for instance, pure play, Channel 7 distribution network, they're on about 5 times earnings. They've got their headwinds, no doubt about that. Revenues are coming down at about 7 or 8% a year, but at five times earnings, that's looking quite cheap. We haven't spoken about resources in probably 5 years, but everything's got a price, and I think that just without knowing where commodity prices are going to go, they're very hard to forecast. There's a lot of negativity built in there. Most of the movement these days is speculation. There is no way that the underlying demand-supply dynamic can affect, for instance, the price of iron ore the way that the market reaction would indicate. So I think perhaps resources is an area to look at. The banks have come off a lot. The market seems to be gravitating to these big momentum trades at the moment. Everyone knows about Blackmores and Domino's Pizza. We're avoiding those because, look, if you are a momentum trader, go for your life and see if you can do well out of those. But when you've got businesses that are priced for that sort of perfection on 60 times earnings and the like, then not much has to go wrong for them to get hit significantly. Well, as far as the regulation's concerned, nothing's changed yet, and it doesn't look like it's going to change until after the election, which could be any time now. But Turnbull's definitely indicated that he wants to, first of all, scrap the media reach rule, which means that no one TV network can distribute content to more than 75% of the population. So what they did is established affiliate arrangements. So, for instance, Channel 7 distribute 25% of its content through Prime TV into regional areas. So that's what's going on there. That legislation is redundant in today's environment. The pace of movement in, for instance, online streaming, there really needs to be more of a commercial arrangement, and so that needs to be addressed. The media reach rule will be scrapped. There's no doubt in my mind about that. If that happens, then it's just a natural progression, and using Channel 7 and Prime TV as an example, there are huge synergies to be gained should Channel 7 decide to take over Prime TV. Channel 7 already derive a lot of their revenue from Prime, so that's a little bit of a hindrance to them actually taking it over. But they can strip out a lot of head office costs, streamline everything, still get that regional content distribution, because I think they will be required to maintain the regional content in their channels. But yeah, they're definitely ripe for consolidation, and once the rules change, it'll happen very, very fast, in my view. I actually don't think it's been priced in. It's been spoken about a lot. Again, using Prime as an example, it's trading on 5 times earnings. So the earnings are dropping by about 8% a year, and that's a function of a few things. The advertising cycles at a low ebb broadly. Retail's actually been quite good. They're the biggest contributor to the advertising market, but auto and leisure and a lot of these types of industries just have been dropping off quite a lot. So generally advertising is low. Advertising in regional areas has been hit because regional areas are exposed to things like mining. So that's had its issues. And then you've got where people actually advertise. So there are more advertisers looking at online platforms and different areas to advertise. So free-to-air advertising has lost its appeal. So they're all the headwinds. They're all known about. I just think that everything has a price. Again, Prime TV, 5 times earnings. I think there's a big tail in the business still. If earnings continue to deteriorate, I just don't think they're being priced in at the moment. And they've got about a 50% payout ratio. The yield is up towards 20%. So the dividend's reasonably safe. And there will be a point when earnings stabilise, where the people that are going to drop off free-to-air TV have done so and they've gone on to Netflix or Stan or something else. So look, you never want to be comfortable investing in anything, because that sort of doesn't really often lead to a good outcome. So it's good to be uncomfortable, and I'm uncomfortable enough to invest in Prime.